Hey everyone, welcome back to Corporate Decoder. SEM just filed an 8K detailing a special shareholder meeting and a proposed merger, and I am seeing a critical vote of confidence here. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big takeaway is shareholder approval for a buyout, paving the way for the company to go private. So, what exactly happened here is that Select Medical Holdings Corporation, or SEM as it is known by its stock ticker, held a special meeting of its shareholders. The main reason for this meeting was to vote on a proposed merger agreement. This is where the company is essentially being bought out. The company Select Medical Holdings Corporation is a well-known player in the healthcare sector. Focusing on medical care facilities, they have a significant market cap of around $2 billion and employ over 30,000 people. The meeting took place on the 26th of June 2026, and the company is reporting the results on this 8K filing. The earliest reported event is the date of the meeting itself. Now, the core of this filing is about a proposal called the merger proposal. This is a proposal to adopt an agreement and plan of merger. Essentially, it is the official document outlining the terms of the company being acquired. This agreement was made back on the 2nd of March 2026, with entities named Stallion Intermediate Corporation and Stallion Merger Subcorporation. For this merger to go through, it needed to get approval from the shareholders in two key ways. First, it needed a majority approval, meaning a majority of all outstanding shares entitled to vote had to vote for it. And second, it needed unaffiliated stockholder approval. This is an important distinction. It means a majority of shares, excluding those owned by the buyer and their associated parties, had to vote in favour. This ensures that the deal is truly supported by the independent shareholders, and not just by those intrinsically linked to the buyout itself. And the results are quite decisive. For the majority approval, a massive 99,005,011 shares voted in favour. That is a huge number and indicates strong support from the overall shareholder base. When we look at the unaffiliated stockholder approval, we see 81,819,453 votes in favour. This is also a very strong showing, demonstrating that the independent investors are on board with this deal. These numbers clearly show that the shareholders have given the green light for this acquisition. There was also another vote called the compensation proposal. This was a non-binding advisory vote to approve certain compensation arrangements for the company's executives related to the merger. It is like an say on pay vote just in the context of this deal. And this proposal also passed with 52,322,733 shares voting in favour. While this is an advisory vote, it still signals shareholder agreement with the proposed executive compensation tied to the merger. Finally, there was an adjournment proposal. This is basically a proposal to allow the meeting to be postponed if there wasn't enough support for the main merger proposal. However, since the merger proposal passed so overwhelmingly, this adjournment proposal became unnecessary or moot. Following the meeting on the 26th of June 2026, the company issued a press release to announce these results. This is a standard practice designed to keep the public informed about significant corporate events. Now, typical for these filings, there is a section on forward-looking statements. This part is essentially a disclaimer warning that the company's actual future results might differ from what they currently expect. They list several risks and uncertainties, including the possibility that the merger might not be completed, disruptions to the business, litigation, and other factors that could affect their performance. This is a standard legal protection. And in terms of what is attached to this filing, we have Exhibit 99.1, which is that press release announcing the special meeting results. And then there is the cover page interactive data file, which is standard for electronic filings. Now, the filing is then signed off by John F. Duggan, who holds the title of Executive Vice President, General Counsel, and Secretary. This just confirms the authenticity of the report. To put this in perspective, this shareholder approval for a buyout is a significant moment. We've seen similar situations with companies like Sears in the past, where major restructuring or acquisitions were approved by shareholders, though not always with positive long-term outcomes for existing investors. The key here is the overwhelming support, especially from unaffiliated shareholders. This suggests the terms of the deal are seen as favourable by the majority of those not directly involved in orchestrating the buyout. My biggest concern is always what happens post-merger. Will the new owners effectively manage Select Medical, or are there hidden issues the company is trying to offload? The announcement itself has already caused some market reaction, with reports of traders snapping up shares ahead of a potential delisting, which is common when a company is acquired. The fact that the deal is expected to close around the 30th of June 2026 means the transition is happening very quickly. What I am actually looking for is how the integration proceeds, and if the promise value which led to such strong shareholder approval actually materializes for all stakeholders involved. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.